Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 17th of February, 2021. Okay, an interesting day today. You know, they broke the heck out of the stock markets, the indices early on, and then later in the morning, as the economic data kept coming out, it was just positive as can be. Retail sales looking good, industrial production capacity, everything is coming out looking good. We're seeing that the COVID case counts are dropping. They're not going up any longer as a country. Different areas, of course, going up, but as a whole, things are okay. We know that with the cold weather, things will get hunkered back. I went today for my second COVID shot at Walgreens. I was the only person in line. Parking lot was been plowed. So I don't get it. I don't know why people weren't there, but it was the timing of it. I asked the girl, I said, are people canceling? Do you have any spares? She said no. Nobody's canceled, and they had quite a few to give out. They were just the way it was. I happened to come at the lull period at 12:45 in the afternoon. So interesting as to how that works out, but we'll see what goes on. I hope I'm okay. It feels like a flu shot now more than anything, but it is the second shot. So as you look at what's going on across the board from me, the metals are in trouble. They got hit. Silver held a little bit. You can see IWM got hit. And even tonight, the IWM chart on the futures is the weakest looking, but that doesn't mean it's bearish. It's not yet. It's still looking good. When we look at PAVE, I read today what the Fed notes were. You know, at about 1 in the afternoon, the FOMC minutes from last month came out. The Fed is very clear. They want fiscal spending. Now, they control monetary policy. Fiscal is the key word for Capitol Hill. They want a large amount to happen. Well, I think that held PAVE somewhat in line because one of the beneficiaries could be as we do infrastructure. You still have an uptrend in it, higher lows, higher highs. The market is still over the 18-day average, which means the bias is up. You haven't hit a Bollinger Band in quite a while, since January early on. It's still a potential target. Momentum is overbought, though. It can switch gears to embed if these two numbers that are over 80 have 3 days of doing that. So you did it today. Did you do it yesterday? You certainly did. And what about the day before? No. So I need tomorrow in PAVE to have a day where they embed again. Unchanged to higher close would certainly be one of those makings of it. If that occurs, until the red line closes back under 80, the target becomes 2306. If you look back here, you did not embed when you got up there. You don't always have to embed to get there, but notice the difference. You had taken back here and contracted the trading range dramatically. That's not the pattern you have now. You have a wide berth in the trading range. Very different. The market had a breakout, pulled back, challenged that breakout area, and is again challenging the highs that you made there. That's the way that I'd interpret the chart. THCX, you still have a situation here that is not screaming buy me right now. It is bullish in the sense that you have higher lows, but you also have lower highs. You have the framework of the bias up. However, folks, you have momentum pointing down. So I'm looking at the market. Could it settle back into the 18-day average? Yeah. What would turn the trend back to the upside? Taking out 2469 would be one of the steps. You'd have the higher lows and then higher highs, which you don't have right now. You need to at least flatten out the momentum from pointing down like it is to going sideways. That would do the job. Then you'd have a target potential. Doesn't mean you'd have to hit it near 2800. Right here? No. SMH, the market's hit its upside target. Hit it right here, right where I'm pointing. Gave you an extra gravy, and now it's pulling back in an overbought market. Is it embedding? Well, both numbers were over 80 in the slow stochastic at the close today. On Tuesday, we're both over 80, and the day before. You're embedded. So now this pullback, as long as the red line doesn't close under, let's call it 79, I contend that the pros are buying between here on this break, trying to see if they can drive it back up there. If you get a close under 79 on the red number, then I think the market can fall back to the 18-day average to reestablish whatever it's going to do. In XLI, I have a fully embedded reading, which tells me that I don't care if I've got a higher high, lower low. This is what rules the day. And as that, I think the pros are buying on these breaks, looking to see if it can drive through the most recent high of 90.86 to get up to that 91.68. I think people will bail if you close under the 79 reading there. XLE, you've now gotten up as of yesterday actually to the objective in an overbought market that right now might embed. Day one of embedding was today, day two yesterday, and the day before was Friday. So you have your 3 sessions. One of the rules that I teach with this is you don't want to be a buyer if you first take out the previous day's high. That's a warning sign. You could get one of those reversals. This still rules the day, but there's ways to work within it. I don't see how to buy against the Bollinger Band right now. QQQ, as long as you keep the embedded reading, I'm in the bull camp. I contend the pros are still buying here. I know it doesn't look that way since the swing line isn't up, but this in the hierarchy is the key. Lose that reading with a 79 or lower reading, I have to go back to the drawing board. You could fall. And where to? Anybody's guess. Certainly, the 18-day average is the first possibility, and after that, it could be more. You've come up so much. Do I expect it? I expect nothing. I watch the embedded reading, okay? I don't think about it. I react to the chart pattern. In the emerging market, you hit your upside target yesterday. You're embedded. What do you think traders are going to do on these pullbacks? If you're a subscriber of mine in the morning video, I start recording at 8:40. In the morning, as these markets are only open 10 minutes and I'm already covering them in my recordings for you, and then I post the video, you will see what I say about these. And I'm doing that first thing in the morning. So, you get a pretty good feel as to what the day might hold, might not, off when we reopen. Reopening is very important. Why? A lot of these markets look at the futures markets. Futures trade during the week, basically from Sunday night when they reopen at 5 until the close Friday at 4, about 23 hours a day. They all close at 4 o'clock. Many of them reopen starting at 5. There's staggered hours on some, and I'm talking PM. So the vast majority are about 23 hours a day of trading. Well, you don't get that in these markets. When you open GLD, you got 8-hour day. Little different. So they've digested an awful lot of what gold's done, and then you get your jumps in this. You're under the Bollinger Band, you're oversold, the market's not in a trend. You have a higher high and a lower low. What are the odds of staying under the black dashed line? It's called a Bollinger Band, 5% of the time. The algorithms build that in. I don't see algorithms often buying over those numbers or selling under them. They could, but I'm not. The guys that I've talked to that build these programs over the years, they may not do it the way that I'm saying it to you, but there's methods that they use. The market's extended, whatever they want to call it, and they have some indicator they're looking at, typically. Remember, all these do them different ways. Otherwise, they'd all be bidding at the same price, offering at the same price. Same thing in GDX. My signals are saying, hey, time to get away. The money's been made for whatever that means. You're down to the Bollinger Band. You're oversold. You're not in a trend. You haven't been in one for a long time. TLT, the first challenge of the Bollinger Band. I scream it here. That's where I think the pros take money off the table. If they want to jam their stop down, that's fine. But jamming the stop down doesn't mean often letting it get past that day's high the very next day. And that's what happened today. That's not a bullish sign. It's just a sign they've taken money. They've got a gun. They're putting new bullets in it. They may be selling the market on rallies if given the opportunity because the market is still embedded. As we take a look at FXE, I have been saying one thing I think pretty clear. This market refuses to really set itself up for much of anything. It tries an uptrend, but if it gets under that number, goes right back into a downtrend. And where's it giving you a buy signal? In a very overbought area. Any number over 70 is overbought. I swear to you, I have a rule. Numbers over 70, I tell my traders, overbought, I don't care what it's doing. You trade it. I wouldn't be making recommendations on the long side. Get it embedded, and I will. Well, you're not there. And today what it did, now you got a bearish signal, an all-out bear signal. You got lower highs, lower lows. I think the pros will be looking at this market hard at that 18-day average of closes. The risk will be if you get back over yesterday's high, and that number was 113.71. So the risk on the trade, approximately 24 cents. Okay, their objective, if the market falls, probably this target. Momentum down, bias down, trend down. That's how I look at those. So there's another indicator that you, if you're a little more sophisticated, might want to take a look at. And it's an indicator that is price and time, the relationship between the two. I'll explain it in a way you might want to understand it. Let's assume your indicator is bullish. Bullish should mean that in some manner you're making higher highs and higher lows. At a minimum, the higher high if you're bullish. What's the time difference between the prior high and the current one? There's ways to measure this. And if they get too extended, what happens is you're losing momentum. If they're narrow or right where they should be, you're continuing the trend. I created a video series that really explains it between PowerPoints and showing the indicator if you wanted to look at it. Just go to our website. Under free offers, it's there. Just click those. We send you a link, everything you need to get right into it. Got it? That's the simplest way. The best way to get it right away, call my staff. They'll take care of it and get everything from you. And if you need more, they're just putting it all together right then and there for you. I'm Ira Epstein. Have a great day. I'll see you all tomorrow.